What's up, everybody? Welcome back to the Small Cap Recap. I'd like to talk about the current market environment that we are in, which has been absolutely nuts. But before we get into details, I want to discuss the divergence that I have been pounding the table on my past couple of video lessons. So you can see the Dow basically tapped the 200-day yesterday. This 25-5 level I thought was pretty significant, and we've had a pretty significant losing streak all the way down to about 24,000. We kind of cracked the 200. But if you look at SPY and IWM, not even close to the 200. So it goes to show this is something that college teaches. This is basic fundamentals. The Dow, because it's mostly transports tend to be leading economic indicators, so you can see, what the economy could possibly do. The Dow typically foreshadows this, whereas, IWM and tech are lagging. So it'll be very interesting to see what happens. The 200-day is very important, but more importantly, I think these lows right here, on each of these are way more important. We could crack the 200-day, but on the Dow, I'm watching 23,000. On the SPY, I think this 255 level is significant. So we still have a long way to go before I think everyone can start panicking, and the media outlets don't make it any better. So yesterday you had the VIX really have a nice push, and I think on the VIX this 40 level is super significant. So I will be watching that as well. So that's just the basic market. Small cap land has been in its own planet, in my opinion. I said this on Twitter. There's been a couple of high quality problems as a small cap trader lately. Number one, very difficult to get a borrow. So I think that what you have is the people that are getting borrows are early, and you're getting a lot of short squeezes. Um, the Dow was down 450 points yesterday, and we had four small caps that were up over 100%. So you could trade these small caps all day and not even look at an index and not have zero clue what the overall market's doing, which is pretty nuts. And then if you look at the market and you see it's down, you want to start hammering these shorts, and that just hasn't been working. So the first one's ABIL. This has been the theme, reverse split pump. The company, I'm pretty sure, makes like 15 grand a year, if that. And used to be a 30-cent stock. They reverse split 1 for 10, goes from 250 to 1250 within 3 days. So during the Dow's, I think, like worst losing streak in a while, you have this stock rip like 500%, which is nuts. No news, just a pure trading vehicle. So as a newer trader, get a lot of people in chat that are newer. If you haven't seen this before, it can be mind-blowing. But if you've been around for a little bit, this tends to happen every year, especially summertime can be very different in my opinion. So the key is to adapt, because what worked last week isn't working this week. What worked 2 weeks ago doesn't work this week. It's all about adapting to the market environment. You can have 10 different edges and setups, but the key is figuring out which setup works now. And that's the most important thing, in my opinion, is to be able to adapt and react, not trying to predict. So ABIL was crazy. Float on it, I'm seeing around 800,000 shares, and you just have pure float rotation and squeeze on this. Another one was YECO, YECO. No news. China, on Friday, China stocks made crazy rips. On Friday, I'll show you guys the Friday chart. This is nuts. It goes from 250 to 5 and back to 250 today, and then yesterday, 250 to 6, all the way back. Why? I don't know. It's just the market environment that we are in. CADC, another China one. No news. 5 center, low float, SSR. Friday goes from 5 to 10, back to 5, then back to 7, and then back to 5. Yesterday, from 6, right back to this resistance point, and right back down. Another one, XBIO, from last week. This is one that I had traded last week, and thankfully ended up okay on it, but you can see it's done the same thing. From 2 to 7, basically back to 2.5. And then yesterday, on no news, a couple of chat rooms involved, all the way back up to resistance. So this is the market environment we're in. Longing garbage stocks on no news and just sticking with pure price action and technicals is what's working in the short term. Until that trend changes and we see a couple of stocks like this showing weakness, fading back down, that is still the trend. So going into the next couple of days, that's how I'm going to look at it. You're going to have a lot of people looking for the next big low floater. So the key is to not short too early, not have as much bias on the short side, and maybe look to ride these things for a long is what I'm looking to do. Obviously, love to hammer these short, but lately that has not been the best trade. So like I said, the key is to just manage your risk, keep your sizing small on the short side, and not really size in until you really get that confirm. So this is summer trading, and for me, it's still a nail and bail environment. If I can trade for the first hour and a half, be up significantly, I'm going to go outside and enjoy my day. So I recommend everybody do the same. This market's nuts. And in my opinion, it's not good to, when you see market action like this, the longer you're behind the screen during the day, the more FOMO you get, and you want to be involved. And, in the middle of the days where that lull can get really crazy. And although stocks are moving, it might not mean that they're really high probable trading opportunities. So definitely use breaks. Usually around noon I go take lunch, come back at 1. If there's nothing, I'll come back at 2:30. Use those breaks to your advantage to avoid the FOMO in this market. So everybody has a great day, and I'll catch everybody in the next one.